Welcome, everybody. The Brain Trust is back just to celebrate the death of quantum computing stocks. Derrick Oldensmith has changed his name to Quantum Short because he's having such a good day messing around with these quantum stocks, which are just going into the toilet. So we are here to obviously discuss what's going on in the market. Markets are basically flat year to date, but it does feel like there is quite a bit of chaos out there. So, Derrick, I'm going to start with you. Late last year, you were talking a lot about interest rates, and now, 10-year yield ticked up a bit. It seems like it's causing some volatility. Do you think that's what sort of affected this mild pullback we've seen?
Sure. Yeah, it's definitely having an impact on the market here. I'm actually surprised that the market is holding up as well as it is, given the interest rate move. We have the 10-year, I think, at 4.7% or so right now. I remember reading over a month ago a note from Goldman that said that 4.6% was kind of their threshold where they thought that it would start to have a more significant impact on the stock market. So we've exceeded that. The TLT chart continues to break down, bear flag, break down further. Interest rates are moving higher. That's contributing to more relative weakness in the IWM than in the Qs. But to be totally honest, I'm surprised that we're still holding above the December and January lows, considering what interest rates are doing, because that's significant.
Okay, all right, Sami, and you were pretty consistently bullish for most of 2024, and the SPX is like a couple hundred points off the top. Qs are down a little bit, not a huge amount percentage. Is this even a pullback yet?
I mean, it is a pullback. What's happening is the market lost the momentum. It doesn't have the momentum that it had before. But if you look at the chart of the S&P 500 or the SPY and the Qs, still pretty bullish. It's just the IWM is very weak, is at support, so it's not a time to begin shorting the IWM, I don't think. But it is a lot weaker than the SPY and the Qs. But again, I think the market is honestly healthy. It just needs to probably go sideways for a bit more before resuming the uptrend in the SPY and the Qs.
Okay, I want to talk a little bit about some of these leaders, like namely Nvidia, Tesla, Palantir. So, Derrick, you've been a pretty vocal critic of Palantir, and it seems like it's finally getting cracked a little bit. And, Nvidia had that, massive up move on the CES news. Then it just collapsed yesterday. One of the ugliest red bars we've ever seen for like a big cap tech stock outside of earnings. Do you think it says anything about the market that sort of these big leaders are faltering?
Yeah. So first of all, Palantir, we had a great short call out in our team morning meeting yesterday to short it through the $75 area off the open. So that was a really, really good trade. We're getting a little bit more follow through on it today. I think that this stock could work its way down to $60 over time, especially if the market stays a little bit weak. But the market needs to assist with that by breaking some support levels, which has not happened yet. Nvidia gave a nasty daily candle yesterday. I call that candle a penalty box candle. Like the uptrend in Nvidia isn't broken. In the same way that the big picture uptrend in the S&P and the NASDAQ isn't broken. You still have rising 200 days across the board for the indexes and for Nvidia. But when you get a big, fat, engulfing, negative red Maribozu candlestick like that, it's similar but different to what we saw with the SPYs on December 18th on the Fed day. I call that a penalty box candle. It doesn't necessarily mean that I'm bearish, but the market now needs to prove itself. It needs to get out of the penalty box in order for me to become more bullish again. It needs to recapture some key levels, and that has not happened. So we're seeing a little bit of a rotation trade, because at the same time, if you look at like an XLE, which just got demolished in the first half of December, we were calling for at the end of December kind of a mean reversion trade where some money comes out of Tesla and Palantir and actually maybe goes into value a little bit. So it's been a great kind of multi-week pairs trade there that's played out for us.
Okay, all right. I'm gonna pull up quick chart of Nvidia on the screen. So, Sami, I think that this concept of there being a penalty box. Like do you believe in that? Because we have on the screen here this gigantic red bar in Nvidia. When you see something like that, does that change anything for you?
I think whatever Quantum D says, I believe in it. So I'm I mean, come on. So here's the thing about wide range bars that I discovered the hard way long time ago, is that wide range bars in and of themselves are not all that bullish or all that bearish. But if they produce follow through, then then they're bearish. Or so we don't know on Nvidia yet. It hasn't produced any follow through yet to the downside. So I wouldn't think it's all that bearish yet. If we get another big red bar, then that constitutes follow through, and then I'll look back at the wide range bar and say that was really bearish. But wide range bars in and of themselves don't really mean much unless they produce follow through. Because oftentimes, if you look at an uptrend, you'll see a ton of wide range bars, but you will almost never see a strong uptrend. You'll almost never see two red bars in a row, two solid big red bars in a row. Why? Because in an uptrend, bearish stuff produces no follow through. So bearish events. So we're not after one bar events. We're after two or more bar events. If you see two or more in a row, then you start to believe, okay, this is follow through. If you look at the PLTR, for example, that's producing follow through. That means that probably the uptrend is over on Palantir. PLTR, yeah, that's looking lower. Nvidia still in an uptrend, still respecting the trend. The only thing about Nvidia and what I said about the market is that there's a slowing in momentum at the moment in the Qs and the SPY, and generally speaking in the Mag 7. There's a slowing in momentum right now. So I wouldn't expect necessarily to get much follow through to the upside, much follow through to the downside until we start to see evidence of a trend again. But higher prices were rejected. Nvidia just made new all-time high, I think, and then got rejected. So that tells me we're probably not going higher anytime soon, maybe a little bit lower. But again, lower means betting against the trend, and I don't do so easily. Meaning I don't bet against the trend unless the market or the stock goes climactic. And in the case of Nvidia, it isn't at all. In the case of Palantir, it is. Look at the weekly and the monthly, totally vertical. So when I say climactic, I mean parabolic, right? So yeah, so I think for now, the bias should be probably neutral, maybe mildly bearish, depending on what you're looking at. But I'm looking at the Mag 7 and looking at the SPY, the Qs, mostly, again, mostly neutral or mostly sideways for now. Tesla is an exception. It does look a little bit more bearish than the rest of them from the Mag 7, but yeah, I'm mostly neutral for the time being.
Okay. How about Sami, since I have you here, Bitcoin? Because it's been a few weeks. Bitcoin had the crazy move to like 109K. Then pulled back. What do you think of Bitcoin up here?
I think it's probably headed to 80,000. To tell you the truth, that's what and I don't like to say that. I'm in it and I have a big position in it. But look at the monthly chart on Bitcoin. Look at the topping tail. So it went higher and got rejected. If you look at the daily chart, you'll see a big rounding top. Some people might call it a head and shoulders, whatever. I don't care to give things names. That doesn't mean much to me. But it got rejected, and it looks like it's gonna have a pullback. Doesn't look very good on the daily, the weekly. So I think Bitcoin is probably lower to like the $80,000 area or so, the 20 MA on the weekly chart. So that's what I think.
You're
muted.
Yep, very, very, very sad. Okay, so Derrick, like as you discussed before, you had a big day today with these. I'm sorry, you were shorting these quantum stocks like IonQ and Qubits. Okay, now I noticed that all these stocks were already down pre-market. How do you know when you want to press on something like that? Because I think some of these names were down. They were already down like 20 or 30%. So what makes you want to hit the gas pedal and just slam on them even harder?
Yeah, so these started selling off very heavily after hours yesterday because Jensen Huang, the CEO of Nvidia, came out and he said that while he is bullish on quantum computing, he thinks that it's a story that's like 15 or 30 years in the future still from now. And the way that I trade, I am, we've discussed this before, Sami, 100% pure technicals. I am primarily a technical trader. I describe myself as 85% technicals, 15% fundamentals. I've always liked the idea of building a thesis based on fundamentals and then using technicals to execute that thesis and manage risk and reward. So RGTI, Rigetti Computing, was my heaviest of a whole bunch of these quantum computing stocks that I was short. And the thing about this is this company was trading at like a $5.6 billion market cap, and it's done $8 million in revenue so far in the first 3 quarters of 2024. I mean, so first of all, that's absurd. The stock went from $1.30 to $21 in a month and a half. Pretty impressive, honestly. Now, the thing about going short something like what I just described can potentially be very dangerous. I could have said to myself, it's $7 or $7.50. Oh, this company makes no sense. They've only made $8 million in revenue so far this year, and they're trading at a couple $1 billion probably at that point market cap. I'm going to start shorting the stock, and I would have gotten absolutely destroyed by the time that thing actually peaked out at $21. So that's really where your technicals come into play. This thing started to falter a couple trading sessions ago. In particular, it had like a push through failure on January 6th where it broke through highs. It really should have been able to give technical momentum continuation that day and failed to. So that's when I was really beginning to press. I was pressing it up there. By the time the news came out yesterday and this thing started trading down to $13, $14, it becomes pretty difficult to press lower for me personally when the stock is now down 30%. So it's about having the trade on when the initial signal comes in and then having a game plan in place for reward maximization. I was thinking that this could give a move down to $8 or $10. It broke through 10 today. There was a lot of downside extension in a small time frame, so I just decided to close out the position on it. But it's about recognizing the signal when it comes and not chasing it after the fact. Because sure, it worked down to 950 today, but maybe it only works at 1250, and you think you're pressing it at 1250 after it's down 30%, and then you get smoked on a really big bounce. So game planning for reward maximization, risk management, using technicals to understand execution, that's the key to what we're doing here.
Okay, Derrick, do you think it says anything about the broader markets that it's like a lot of these basically zero revenue, multi-billion-dollar valuation companies, they're being taken out? Does it say anything about the broader environment?
So we do tend to see, I gotta be a little bit careful here, tend to see towards the end of some of these bull runs when we're going to get maybe like some exhaustion in the market as a whole, exactly what you just described. These BS companies that start going up hundreds of percent because I saw a chart this morning that showed that the average retail investor expects the market to move higher right now at a higher percentage than like almost ever in history. And that's all anecdotal evidence, but it's stuff that I like to pay attention to give me an idea of the environment. So yeah, that certainly becomes a signal, but you got to be careful because if you remember in late 2020, early 2021, we had a similar situation where they started running up a lot of BS companies, but that lasted for months before the market actually finally broke those things back down. So I would argue that's probably a once in a decade event, what we saw at the end of 2020 and early 2021. And most of the time when you start seeing them run a lot of these like they have been now, you're kind of getting closer to the end of some degree of exhaustion for the market as a whole. And that doesn't mean I'm calling for a bear market, by the way. Like Sami was saying earlier, I would argue that the bigger picture trend for these indexes is still higher. We still have a rising 200-day for the S&P and for the NASDAQ and for most of these stocks. But it probably signals that it would be healthy for us to pull back a little bit and get rid of some of these animal spirits that are driving these stocks crazy.
Interesting. Yeah. So I just did a scan while Derrick was talking for companies with a $1 billion plus market cap and 50 million or less in revenues. And it's interesting. Like this mRNO, $28 million in revenue, $10 billion market cap. Joby, ASTS, of course, IonQ is here, $6 billion market cap, 37 million in revenues. And that's after, that market cap is after it got slashed in half. Okay, so I do think that this concept of market cycles is kind of interesting. So, Sami, I'll put it to you. Do you ever think in terms of the market's gone up for this number of years in a row, or it's gone from this much from the bottom? Does that type of analysis mean anything to you?
Nothing at all, because the market is very counterintuitive. It's not. It can, you might think, oh, we're up 50%, so the next year we shouldn't move up, and it moves up another 30%. So we have normal human preconceived biases, and like it's normal it's normal to expect the market to slow down a little bit if it's up 30-40% 1 year. But no, that's not what you want to do. What you want to do is always analyze the market, right now, the way it looks, without any preconceived biases or notions, basically, or theories or beliefs that, oh, well, if we're up this much, then we should pull back. So that kind of thinking doesn't work. If it was that easy and that simple, everybody would be a winner. I mean, everybody would make money in the market. They'd look at stocks that are up a certain amount and then predict when they're going to fall. But it doesn't work like that. It's not that easy and that simple that you can just predict it based on how much we're up the last couple of years or last couple of months or last couple of days. I wish it worked like that. It would be easier for everybody.
Yeah, I think it is interesting how as I've looked back like 50 years in the market, and every down year is a buying opportunity, but like not every up year is a selling opportunity, which is like the trickiest thing. I guess it's so difficult to predict. Well, it's difficult to predict the end of anything. So Derrick, I'll put the same question to you. Like, do you believe in this whole concept of up and down cycles? Like, do they make sense for it to? I don't even know what I'm asking right now.
But I think that when you talk to me about up and down market cycles, for me, you're almost asking me for trend analysis. That's how I think about it. Are we in an up cycle? That means that we're in a pattern of higher highs and higher lows. We're in a down cycle. That means that we're in a pattern of lower highs and lower lows. And I'm also a big believer in doing that over the course of multiple time frames. I like to, when I'm doing an analysis of any daily chart or an index daily chart or any of them, I'm analyzing it over the course of 3 general time frames: a small time frame, an intermediate time frame, and a large time frame. And when I look at the S&P right now, I would say that the large time frame is still bullish, that the small time frame is neutral to bearish, and that the intermediate time frame is pretty neutral right now. That's what the pattern of the S&P being in right now. We have lower highs, but we don't have lower lows. So we have not broken into a downtrend. We're kind of building out a little bit of like a descending wedge in the spies. If you connect the dots between absolute highs and the pivot high that we got on December 26th and the pivot high that we got on January 6th. So if I'm looking at a market that's giving me a mixed message on multiple timeframes, that tells me to sometimes take my foot off the gas a little bit until I can get that timeframe continuity again. And then that's how market cycles are formed. Markets work in feedback cycles. Buying leads to more buying, selling leads to more selling. If you crack a support level that triggers somebody's stop, that drives the market a little bit lower, that potentially triggers somebody else's stop. And it's really much more in depth than just stops triggering, because you've got, in this day and age, all of these massive systematic strategies and funds that are moving billions of dollars, but they're rules based. And you'll see that a lot of them are trend following systematic strategies. And when the trend changes, then they go from being buyers to being sellers and just following through on that. Or when you see the VIX increase and volatility increase, then systematic strategies that are tied to volatility will sell. sell equities. But then when you see the VIX come down, when you see realized vol compress, then you'll see that those volatility systematic strategies come back in as buyers. So everything I'm describing is just the underlying of what actually creates technical analysis. Technical analysis is the study of supply and demand, and markets work in feedback cycles, and that's what we're trying to analyze when we think about what market cycles are. Sami loves to be long when we're trending up. I assume Sami loves to be short when we're trending down. Everything else held equal.
Okay, all right. I think that's a good note for us to come to the end on. But of course, I need ideas. I have billions of dollars burning a hole in my pocket, so I need to know what to buy right now. Okay, so Sami, we'll start with you. Is there anything you still like in this very odd market?
Yes, sir. Always. Let's take a look. Let me share the screen. Okay. Here we go. So this is my daily watch list. The Anjo would be something I would have mentioned if we weren't in it already. This is this reported earnings, and I sent out a note yesterday to hold it because of the monthly chart. It's a beautiful monthly chart, but it's already gone. So this one, totally gone. The prison stocks, sorry to say, but they're looking pretty good. The Geo and the CXW. Geo is looking pretty nice. So I like the Geo, I like the CXW. The Geo looks better at the moment. I think CXW needs a little bit of time, but Geo looks good. Gold is looking kind of good. IAG is too soon, but I think some of the gold stocks, if they can base for a little bit, then I think they're going to be good. RBLX I like a lot on the monthly. I don't know that it's, quite ready to really move up, but pretty nice monthly with a lot of room to move if it wants to like $100. So I like that one. I like the Tiva, already in it, has a daily buy setup as a swing, looks pretty nice tomorrow. Like it over 2160, 2175 with a stop under 2090 on the Tiva. I don't know what that is, but it's really bullish. Caught my attention. Monthly is already kind of late. Probably has a little bit more room to go, like to here, to 17, maybe 18. But I've never heard of it, to tell you the truth. SMWB, I just found it while scanning on the weekend. It's a beautiful daily chart. And in the ADPT, doesn't look great at the moment, but if you look at the monthly, that's something to pay attention to if it can clear the recent highs from a couple of days ago. So, and that's kind of it. I have a couple of shorts, but they're all too far gone by now. I'm looking at them. I have like 5-6 shorts. They're all gone. So that's my list. It's not an amazing list, but there's a few items there that I like the Geo, CXW, and Tiva as a swing. Those are, I think, the best 3 ideas that I got at the moment.
Interesting, because I never thought of the prison stocks as sort of Trump trade stocks, but it kind of makes sense. Like Geo gapped up on the election, and it's just been going ever since. Okay, Derrick, how about you? Is there anything you like here, or?
I love that Geo call that Sami just said. I'm gonna have to steal that one. Definitely putting that on my radar. So for me right now, the market is in a little bit of setup territory for me. I actually just unwinded some really big trades that worked out really well for me. So there's not a ton out there that I love. Potentially interested in an MSTR short, though it's starting to run away from me a little bit as we are discussing, as we've been doing our little podcast here over the course of the last 30 minutes. I'm keeping an eye on Tesla for additional shorts. This is also breaking down a little bit right now as we're talking. I guess the Qs are breaking down a little bit right now as we're talking generally. So I've got those on my radar. Outside of that, I'm a little bit in wait and see mode right now. I just described the multiple time frame analysis for the market, but I'm leaning towards a bearish tilt still on this until the spies can prove themselves to me a little bit more. But for the most part, like I said, I'm kind of in wait and see mode. I'm in risk unwind mode, if anything, because I just liquidated a lot of big positions that I had. So for me, it's time to actually take a half step back and think about how I want to reestablish myself going forward.
Excellent. Okay, guys, that is going to close us out. This has been the best show of 2025 by far. Maybe JR will come back with us next week. We miss him dearly. Okay, guys, thank you for coming on, and everybody out there in the audience, thank you for joining us. We appreciate it. We'll be back next week.